Hey everybody, James and John here today with some life-changing information on crypto taxes. So I just wanted to get my tax guru James here to go over a few things that I think are going to really make a difference in your crypto life. So James, thanks so much for being here today. Appreciate it.
Yeah, my pleasure.
All right. So James, let's get into it. You and I talk a lot offline off these episodes about my own tax situation with crypto and everything. I know there's some stuff coming down the pike. I want to kind of set you loose on that because I don't think people are quite ready for what's coming. So if you could just run with that, and I think people are going to find a lot of value in that.
And I appreciate that. I think the way to look at it is that it's sort of like a rising wave, right? You're out on the ocean, water's pretty calm, and then all of a sudden, the closer into the shore that you get, the higher that wave and crest.
Sure.
And I think crypto in general, just as an industry, right?
Yeah.
I think is going through another one of these waves.
Okay.
And I see two things that are going to be critically important in the next probably 9 to 12 months. One, I think there's going to be a lot of purging of a lot of these projects, if you will,
Right.
that are going to be pushed out as ineffective, inefficient. And I think those that survive and come through that, I think there's going to be a lot of a reset in terms of getting really lean and mean, getting really efficient, and starting to get that direction, depending on, obviously the project. You're going to see a lot more of crypto projects into technology. We're working with a company right now, Crypto Tax Shield, on a very innovative technology play for their members to understand how to use the tax side of this to really leverage your advantage. Mm-hmm. And the second thing that I see is we're just now starting to see the early signs of how this is going to start playing out. People involved in crypto, maybe crypto projects, maybe staking a project, maybe buying the coins or being compensated. We're going to start seeing a lot more of this now shaking out in terms of the tax implications, right?
Right.
And to that end, we're seeing a lot of companies using an affiliate type model, for example, to get market share, to get distribution. Maybe they take a project onto a blockchain and tokenize that project and then create a reward model in tokenization to their affiliates. More of a direct sale affiliate model, not so much a network marketing or multi-level marketing. But that affiliate model, I think, is going to see explosive growth over the next 2, maybe 3 years. Sure. And here's the thing that I've been observing since 2016, when we really started digging into the tax side of this in crypto. Number one, and I think I spoke about this on the last episode that we were doing on everyday crypto taxes. How you do crypto is going to determine a lot of how you're going to choose to be taxed.
Right.
If you're doing it as an individual, that's one way. If you're doing it as a single member LLC, that's another way, but it's not different than doing it as an individual. You get no special tax treatment for a single member LLC. You're disregarded for tax purposes, in fact. Now, you can take that single member LLC and elect to tax it like a corporation. And then if you wanted to, you could make an S corporation after you've done that. But I think that there's so much confusion and misinformation out there that people are just not aware that they have other choices. You can do it as a partnership. You can do it as a corporation, as a normal C or an S corporation. So you look at those different ways that you're doing crypto, and then you dig down next level. What kind of crypto activity are you doing? Is this node validation? Are you doing a mining? Do you have a mining rig? Are you buying the equipment? Are you leasing the equipment? Are you staking a project? Are you buying and holding as an investor? Are you flipping and trading like a day trader? Are you getting compensated? A lot of these affiliate programs that are getting into the crypto side of this are actually, their compensation plan is rewarded in the tokens that are driving, that market penetration.
Right.
And the challenge is, it's already difficult enough to figure out, all the different tax navigation tools that you would have for your business, right? And then you throw crypto on top of that with these other two factors, and I just see a tremendous amount of disruption. Disruption is good. It's not bad. Disruption shakes out efficiency, right? And shakes out the inefficiency. And I think we're sitting in a very good position right now as a company, bringing on more experts, bringing on more advisors, bringing on more tax attorneys, CPAs, enrolled agents, to really understand the long game here. And if you're getting into crypto, it really is a long game. It's going to be transformational in a lot of ways. So I think those two things, the disruption that's coming later this year, early next year, a lot of these projects will probably, altcoins, whatever you want to call them, will be kicked to the curb for those inefficiencies. And then as more and more people start disclosing on their tax returns, that whole dynamic will involve a lot more activity dealing with the IRS. And I don't think anybody's prepared for that. And that's why we've spent so much time the last 3 or 4 years building out this model, building out this platform, so that we can help companies and we can help affiliates in these companies really understand the way we're looking at the future. If you're making money in crypto, you're going to have an interaction with the IRS that's going to be very different than if you were just running a business selling lotions or selling ties or whatever. So those are the two things that I think are going to be very, very, very significant in the next 9-12 months.
Yeah, no doubt. No doubt. It is also interesting, and we can get into this another episode, but some of the pushback I see just in my circle is for U.S. taxpayers in particular to think that just because you're on a blockchain or it's DeFi or whatever, that the government IRS doesn't know that you're engaged in these things is false thinking.
Yeah, so, that's absolutely crazy.
Yeah, and we can make multiple episodes on why that's true. But that's the worst thing people can do is to just assume you're invisible and don't owe taxes on those proceeds, because you do. So that's just how it goes, So that's great stuff. Those are two amazing points, and we're gonna do some deep dives into some of that stuff again in the next episode. But I just appreciate you taking some time. And as always, CryptoTaxShield.com, great platform, great people, great professionals that'll help you guys out. If you like the content, smash the like button, subscribe, hit notifications for every new episode that comes out. And James, let's do another one too soon and get out some more info for people, real info.
Yeah, sounds good. All right. Appreciate it. All right.
Thanks, James.
Thanks so much. All right. Take care.